real estate is not sexy. It's not the cool new thing. It's not like high tech. It really isn't. It's slow and boring. But real estate has been around for thousands of years, and it's worked every single time if it's done properly. The reason why millionaires and billionaires invest in real estate is to preserve their wealth. There's a reason why they do it. There's a reason why they do it.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hannes Henschel. Welcome back to The Path to Wealth. I'm your host, Hannes Henschel, and today we have a very well-known guest, Agostino Pintus. And he has been featured in the New York Times, Fortune, MSNBC, just to name a few. He's the host of the Bulletproof Cash Flow Show. After transacting over $250 million worth of real estate, he's the right man to speak to when it comes to mindset and taking action in the real estate industry. He spends a lot of time tweaking and reinforcing habits, and he has some great insights into how to get big things going. Welcome to the show.
Hey man, thanks for having me on. Greatly appreciate it.
Yeah, of course. So originally from Canada, kind of went for the big brother down south. What brought you to the United States, and kind of where did your investment mindset or journey start?
Well, really, I've been an entrepreneur my entire life. Since I was a kid, since I was 10 or 11 years old, I wanted to do my own thing. And I quickly realized that where I was at the time in Canada, it was just very, very difficult to do, right? That country does not really spur entrepreneurism. Many Canadians end up coming here to the States, which is still a safe haven for entrepreneurs. So I realized early on what I needed to do, but that was not exactly super easy at the time because my parents were all about go to school, get your degrees, go work somewhere, and that's the path because that's what we did, And it's certainly not the way to build true wealth. It's a good way to have a job. It's a good way to build a career. Nothing wrong with that. But I fell into that trap, and only to realize that's not really where I needed to be. So once I made the shift here and went through a whole lot of stuff here in the States, it took a while for me to get my footing and finally discover and then rediscover real estate as a way to really build that sustainable financial freedom that everyone's always looking for. But I'll tell you what, it's not exactly as easy as the gurus on Facebook make it out to be. It just isn't. It takes a high degree of help and support to make that a thing. It really does. Yeah. So where in your journey did you notice that what we were told doesn't add up? Like, what was kind of the triggering moment where you woke up? It was fairly recent, probably about 5 or 6 years ago. And I went to go work with a company based in Indianapolis. This company had brought me on to really help fix their technology, right? I was a CIO, I was brought in as a CIO and when I was living in New York at the time. And I go in there, I make the place great, I fix the place up, I do what I need to do to really help get the business off the ground and really fix it. And the guy who hired me, the president of the company, after some time, he was disenfranchised with the business, ended up leaving the company. New guy comes in, and typically in these type of C-level scenarios, whenever a new president comes in or a new CEO comes in and wants to bring in his own people, next thing you know, I'm on the chopping block along with a bunch of other folks like me, and you have to start all over again. And I realize here I am again. I've been fired from many, many jobs in my 40s now. Okay, what am I going to do now? What the hell am I going to do? Like, how many more times can I put my future in someone else's hands and they make a decision that's going to impact me and my family and my future? So I decided that's not going to be a thing anymore. I will not allow that to happen. So I made a commitment to really train, learn how to do something. And at the time, real estate was just starting to come back into my field of view, so to speak. But I had to make a decision to really stop the cycle of going to work somewhere, make the place great, get canned, start it all over again. I've done that so many times. And but it really took that decision and that commitment to really educate myself on what I need to do to become really, really good at acquiring real estate, understanding how to do it, talking to brokers, raising money, all those things that we have to do. It's not easy. It's not easy, but if you commit to doing it, you can succeed. It is definitely learnable. It is teachable. There's a way to do it. Yeah, it was about 5 years ago. That's really what it was, and I decided to make a change, and that's what I did. I put myself on the path, and it's been a long path. I could have shortened it certainly through mentoring, coaching, whatever, but I didn't even know there was such a thing at the time. I had just no idea, right? I just started reading books and just fumbled my way through. Certainly, things would have been much faster if I would have done it another way, but that's how I did it, and it seemed to work. I did okay. Did fine.
Well, you still applied yourself, and I think having a bias towards massive action certainly helps. So for someone, who's maybe earning six figures right now, and they're very much used to their paycheck just rolling in, spending the majority of it, maybe they're saving 10% for the rainy days. What is the mindset that they need to apply to make a shift in their financial future? Because the reality is you can live into your retirement off the money you make and have like a very minor retirement savings account and kind of assume that life will be cheaper because you're not doing that much. But the reality is, as you get older, there's other medical expenses. It's not that you really need a whole lot less money. It might even be more once you're actually older. How would you help somebody get started in that journey? What is the mindset that they need to make a shift where they can actually retire, at least like as a basic millionaire?
Sure. Well, I'll tell you what, before I get into that, here's the thing that people need to realize very, very quickly. The buying power of that dollar is quickly declining with every single time they turn on the printers, they being the Fed, the government, printing off cash and then just handing it out like candy. When that happens, okay, that $1 million that you're earning right now as a 30 or 40 something today, you're thinking, okay, if I can just set aside $4 million. $4 million is enough to get me into my golden years, and I should be fine. Well, guess what, guys? That's not the case. Why? Because we keep on printing cash into oblivion. We just sent another 1.5 or 1.7 trillion dollars to the Ukraine just over Christmas. Merry Christmas, guys. So that's just one shot. 1.7 trillion, gone. That's it. And guess who pays for it? We do. So what does it do to the buying power of that dollar? Well, if you guys haven't priced out eggs recently, a box of eggs, I don't know, 8 months ago was $5. Today it's $21 at the same store. Clearly, that dollar's not going to go far. So how do you protect yourself as a person earning the six figures in corporate, for instance, right? The hardest thing when I made that shift, I can tell you when I was working in corporate I ended up losing my job. Everyone's at risk. Anybody watching this is at risk. Doesn't matter where you are in the hierarchy. Everyone's at risk. I was scared to death, right? I was scared because I'm like, oh my God, what am I going to do? And us as people that are very motivated and driven, we attach our value, our own personal value to that check, to that company, and it's not the case at all. It really isn't. It really isn't at all. It's really the value you bring to your family and the wealth you have to build in for yourself to support your family. That's what matters the most, right? Not the value. And I often felt like crap because I was now unemployed, But here's the thing. The way I would see it is that having a second, third, fourth, fifth stream of income is absolutely critical. You have to now. You have no choice. And not to mention, too, when you apply the real estate formula to it, and you get the huge tax advantages. You get the depreciation along with it. It's a store of value. You're putting cash into an asset that's increasing in value if it's the right asset, of course. At worst, it stays flat, but at least it's not going down, right?
Yeah.
As long as you're doing that and socking away money there, as opposed to sending it to the bank at a less than a 1% interest rate, and it's losing value, and they're taking that same dollar and they're renting it out to other people, they're making a killing, the bank's making a killing, and they're giving you a pittance. I mean, it's not worth doing it anymore. That game that we were taught as kids, at least here in the States anyway, that we were taught as kids back in the 60s and 70s does not work anymore. It just doesn't work. It can't work. Right? It requires a very different strategy, just because, again, we're in these very different times when they just turn on the printers and print off $1 trillion in a snap of a finger. You have to be able to battle that, and the way you do it is through real estate. It's the only way. It's the only way that I know of, anyway.
Yeah. And what you mentioned about the banks is, anytime you go to major cities, who has the most impressive buildings since the Medicis? Or it's usually somewhat tied around banks. Whether you go to Frankfurt or New York, it's always the capital centers that have the most massive buildings. So that they're making a killing on our money. So it's better to take charge right there.
100%. 100% they are. I mean, hey, listen, I'm not angry at another company or another person's success. That's perfectly fine. Part of it is don't get angry at the system. Understand how the system works and just play into it. If you can't beat them, join them. Just do what they do. It's like all these rules, all these laws that are in place today. Anybody could use them. Anyone can use them. You just have to apply it. You have to process the information and then apply it. That's basically it.
And that's the thing, but it takes education. Anybody that has ever listened to Tom Wheelwright is like, hey, the tax code is an incentive structure for you to behave a certain way. Play by their rules and you get tax advantages. Like, that's all. You don't even need to cheat. And anyway, if you're in that big bracket, you will be out of it by default almost. If you're as wealthy as Elon Musk or other guys up there, they don't need to cheat. It's legit. They play by the rules, but most people don't sit down and read the rules.
That's right. They don't. And again, part of it is that the education system is broken. It has been broken for a long time. The original education system that came out of the United States anyway was designed to build soldiers and workers. Those are the two things that was designed to build, not really entrepreneurs. And again, I'm not mad at workers. I'm not mad at soldiers. I love what they do for the country. I love what they do for our freedom. I'm not mad at it at all. All I'm saying is that it's a misalignment with certain folks that really want to be entrepreneurs, because we're not really taught that. We're taught to play within the boundary here, and that's all. This is all you have right here. Just this little box, and you go do whatever it says in this little box here. And that's, if you're going to be an entrepreneur, it's very hard to be in one little box and just get wealthy that way. It's really difficult to do, and that's why, like you said, to your point, education. The education you're going to need to be successful is often not found in college. Many of the guys, I'll tell you what, I have 2 master's degrees, undergrad in engineering tech. I did not learn anything about what I'm doing today in school. Maybe my MBA, maybe. There's a few things I picked up there. But I learned it on my own. Right? And I learned it because it was necessary. It was absolutely necessary, Could have been better ways to do it. But hey, whatever. I got it done, right? It's all I can look at it.
Yeah. But the interesting thing is, for me, it was very similar. For me, the pain of seeing my parents and their parents and so many of the people that I loved in their close to retirement age, and I could see the fear in their eyes, knowing that it's not going to be enough. And that's different for different people around me. But I was like, wow, all of them worked really, really hard. There's not a single lazy individual there that just chilled out and went for Social Security. I'm like, and they all kind of got that moment of, wait, I can't retire the way I originally, and they didn't have any big dreams. They just wanted to maybe have a little bit nicer house in a little bit nicer area, or maybe just stay in the city where they lived, like New York City, and then realized, like, wait, I can't even live in New York City because it's not adding up. And those were those inflection moments for me. I'm like, wait. I see a lot of pain very far down the road. How can I protect my family, like my now family and myself, from going down the same path? Because obviously what I've been told here for so many decades growing up isn't leading to the right outcome. And that's just like you, that's when I decided to sit down in the public library, and I was like, I'm going to figure this out.
Yeah. And I think that's the same playbook that many guys our age went through, right? Where we had a scenario that, again, might have worked before, and even that could have been questionable, because it sounds to me like, your family was largely working in labor, working with their hands. My family did the same thing, and to try to build success doing that today is extremely difficult, especially in today's world. Like a farmer from 80 years ago would certainly not survive in how everything is today. Why? Well, because everything now is backed by large corporations that are actually produce our food that we eat every day. It's not done by, very rarely is it done by individual farmers, right? It's not done like that anymore. So how do you protect yourself? And really, real estate's the only way. And it's funny, I was talking to someone just yesterday, actually, and everyone who wants to get into multifamily, everyone wants to start doing all that stuff. It's extremely hard to do if you don't know what you're doing. So you have two options, really. You can either get into a course and learn how to do it the proper way, get into a mastermind, so to speak, and learn how to do it, learn how to raise the money, learn how to find the asset, learn how to run the property management, learn how to do those weekly calls, learn how to build up the KPI sheets, do all that stuff, run it for 10 years, make sure it's profitable. You can do that. Or you can invest alongside experienced people that know what they're doing. And the cool thing about that option B is that you get the upside of the tax advantage, you get the depreciation, you get the returns, because usually the returns for a limited partner are they're fairly solid, and they get paid before anyone else does, and you're investing in a hard asset, and you don't have to mess with it. I mean, that's a pretty compelling, it's a pretty compelling offer right there, as opposed to running the deal, right? Which is what we do. We also have systems and processes in place. We have a great team that do it. So, and we all split the work, so it's not as bad. But it's like, it all depends on what you want to do, right? But I mean, ultimately, whoever's listening to this message, getting into real estate in one way, shape, or form, and I'm not saying a REIT or anything else like that, I'm saying investing directly in these assets is something that really needs to be part of your overall investment strategy. Not crypto, not any of these, not stocks, none of that stuff, real estate, because of all those things I just mentioned.
I'm part of one mastermind where we also have one sub-channel just for crypto related. And the other day I just looked for it for fun because, everything is going bust. We've seen like major losses, 60, 95% going down. So I was like, it got really quiet in this group suddenly, and I just booked it. All of us are real estate investors at heart, but it was that really interesting moment where I'm like, okay, now the frenzy is over and the dust has settled a little bit. And what still pays monthly or quarterly is our real estate cash flow. Despite all the excitement, and real estate might sound very boring to people, but I think even a passive investor appreciates in all the craziness that's going on right now, just like clockwork receiving their checks. There's, even during COVID, when the world was on fire, the majority of our properties was cash flowing just fine. Did we stop distributions for a bit just to see what's going on? Yes, but the properties were cash flowing, people were paying their rent, everybody wanted to be home and also know they paid their rent. So we didn't have any troubles in those 2 years of turmoil where the world was on fire,
Yeah. Yeah, well, it's funny because crypto, stocks, ETFs, all is based off of speculation. Speculation. We don't know where it's going to be tomorrow. We don't know where it's going to be a month from now. We don't even know if whatever that crypto coin or whatever is going to be even around next year. This property I'm in right now was built by John D. Rockefeller over 100 years ago. It's still here today. I'm sitting in it right now. We're going to renovate it. It'll be here for 100 more, at least. It has to be. It's solid building. It's going to be here, right? The example, it's funny. There's a buddy of mine. He was telling me about how risky real estate is. I just chuckled and I said, it was the first of April or something, right? And I said, listen, bro, how at the end of the month, on May 1st. What's your stock price? What's the stock price going to be? What's this crypto price? Whatever it was. I think it was stocks, actually. What was the stock price going to be on May 1st? He's like, I don't know. I go, what do you mean you don't know? How do you not know that? He goes, well, how would I know that? We don't know. I don't know where the market's going to be. I go, okay, well, here's the thing. I have 1,600 units with all these families living in them, and all these families have leases, contracts, basically, that tell me they have to pay me on the 1st of every month. So I can tell you that on May the 1st, I will get X amount of money across 1,600 units because I have a lease that says so. And if the lease is not fulfilled, I then have a remedy to go get that money if they decide not to pay. Why? I mean, again, how is that risky? It doesn't make any sense, right? I'd rather prefer working with things that are for sure, right? Like, you don't get rich quick, you get rich for sure. And I think that crypto and stocks, all this, especially the crypto game, it's all speculation. It's based off fiat currency, the same thing. It's based on the U.S. dollar. The U.S. dollar is a fiat currency. And a fiat currency is a house of cards to begin with. Again, why base it off of that? It doesn't. It's like you said. It was like a frenzy. People get all excited, and then once it goes bust, nobody talks about it anymore. Like NFTs, it's the same sort of thing. NFT stands for non-fungible token. What does that mean? That means non-fungible means that you can't exchange it. It's not fungible. Fungible means you can exchange it for something. When it's non-fungible, it means you can't. It's literally in the name says it's not fungible. It's worthless. The name says it's worthless, right? It's just funny.
Yeah. And for people, so the fiat currency is a system that's by decree. Fiat means by decree. And we went all the gold standards in the 70s. And that's when the money was no more valued as per the gold standard. And there was no more backing of gold ever since. And it's basically just because we as people decide to trust that this has value. And the interesting thing is any country in history that started doing that basically started the clock of, you said it earlier, the fall of Rome. Yeah. But
yeah. I mean, hey, listen, every fiat currency, every single one in human history, and there's been thousands of them, thousands of fiat currencies, thousands of them. Every single one has gone to zero without fail. Every single one. And I'm not being dramatic. It is fact. It is true.
Yes.
Every one.
That's not doomsday talk. That's really...
The US dollar is the fiat currency.
Yeah, I mean...
No, it's true. It's reality.
Yeah. But also the reality is...
And I think, but it's important what you just pointed out.
Yeah. So...
No, go ahead.
Right now, I'm back home in Germany. The building I'm sitting in has experienced at least, I think, 4 currency changes, but the building is still there. So whatever the currency of the year is or the time, we still have the building. So the value is real. It's real estate for a reason. And one of the reasons I appreciated it after having made different kinds of investments from startups to stocks, I'm like, okay, this is tangible. I can actually go there and I can see the building. I can also speak to the tenants that live in those units. And as you said, there's lease agreements that hold them accountable to pay their rent. So this is where, for me, I understand that people see the news and there's headlines that tell them whoa, the market is in a bubble and there's valuations. But I mean, there's a reason that we invest in multifamily, which is large scale, and those are professional businesses. Those are not single houses that depend on the local market. We like to run professional businesses where, as you made the point, we know what the rental income will be. Do we know it for all the years into the future? Yeah. No, but it's a lot more predictable than any of the other asset classes that I've been exposed to and that are continuously thrown at us by the mainstream media.
Yeah, that's right. And there are ways to get into real estate that are even more predictable than multifamily. Everybody's focused on multifamily. Nothing wrong with multifamily. We own a lot of multifamily. What we started doing also is getting into the net lease game. So this is single-tenant net lease, and these are corporate-backed, usually publicly traded, but not always. But they're corporate-backed, large companies that have long-term leases in these single-tenant buildings. So Dollar General, Dollar Tree, Advance Auto Parts, Vetcor, all these large companies, long-term, and they guarantee the lease. So meaning, here's what it means. They will pay the lease. If the company goes out of business, the leaseholder gets paid first before the shareholders do. I mean, Dollar General going out of business tomorrow? Probably not, right? As a matter of fact, I think all the dollar retail type companies are going to have blowout years in the next several years, just because of where we are in the economic cycle. Same thing with automotive too. I mean, if you think about it, in the automotive world, Advance Auto Parts, when things get really, really tight, people hold on to their cars for a lot longer. They have to repair them. They're going to repair the car as opposed to trading them in for something else, right? All these types of businesses will do very well. But here's the thing. It's usually monthly returns. This is what we do anyway. We do a monthly return, and it's extremely predictable, right? And you still have the asset, and you do the cost segregation. We do all that stuff on the asset too. It's still depreciated. Very similar profile as multifamily. The difference is that because it's a lower risk, it's a risk-adjusted return, but it is monthly. So you're trading one thing for another, right? And these are not like, you're not concerned so much about the tenant class because, it's Advance Auto Parts, or it's Starbucks, or it's DaVita, or it's one of these companies that everyone knows who they are, right? So it's a very different type of scenario. So we started mixing that in our overall portfolio. So aside from multifamily, which is a big part of it, we do development as well. So we build stuff ground up, and also, like I mentioned with the Rockefeller here, and also this net lease business too. So really to help smooth things out for our investor pool as time goes on is why we did it that way.
Yeah. Do you have that all structured in multiple funds, or in single funds or single investments?
No, that's a good question. Right now, each deal is its own deal, with the exception of the net lease business. So we're still syndicating the multifamily and the developments, right? Those are all one-offs, right? The net lease is a little different. With the net lease business, that's a fund. It's a blind pool. And what a blind pool means is that we tell our investors, okay, guys, listen, here's what we're going to do. We're going to buy these types of assets in these types of locations with this type of return objective. And so if you go ahead and invest, we're going to be buying them. The reason why we have to do it that way with those deals is because those deals move very, very quickly. So we have to have the capital available to just go ahead and close, right? Lenders move very, very fast on those deals. Like usually 30 days they can get a deal closed, right, on those types of assets, because lenders love those deals. They love like single-tenant net lease. They love it. They'll shut that deal down in 30 days, no problem. So if you figure 30 days for due diligence, 30 days for financing contingency, that's usually long for many of these guys. But I like to do things the right way. I want to do all the due diligence and all that fun stuff. I don't want to skip on any of that stuff. I'm just careful that way. But yeah, basically that's what it is. It's a blind pool, as opposed to a syndication. But again, the cool thing about it is with the blind pool, if I'm telling you we're looking to buy advanced auto parts in mostly red states where there's no red tape, and we're targeting probably the southern part of the United States. These stores might cost between $1 million to $2 million. You got a picture of what it's going to be. I tell you what the return targets are. You're like, oh, okay, cool. Here's a couple $100,000. Great. I mean, and then we're looking through deals all the time. We buy the deal, you get a return check. It's not hard, right? It's very, very easy, right? So it's and you already know what advanced auto parts is. Like, it isn't like it's a mystery. You know what it is, and you know what they do. You've probably been to one that day, you know. So yeah, it's very, very predictable, very interesting. Yeah,
and that's I think is another thing about real estate that people can wrap their head around. Like if you tell people like, hey, we have a single tenant, it's called Starbucks. Like, okay, people understand what that means. They know they do their research. You know, if you have a Starbucks, they're not going to put it in the last part of town. They're doing their market research. It's all done. They're doing the due diligence for you.
And that's the hardest part is in the whole net lease business is finding the deal. That's probably the hardest part. You know, there's so many deals out there. There's a lot of assets. It's kind of like multifamily. I mean, obviously you have to do due diligence, but with net lease, there's a lot of deals out there, and a lot of deals don't make financial sense. They just don't, right? So the key is getting through the deals, understanding what it is you're dealing with, understanding some of the tax implications, understanding what insurance is going to look like, understanding what the terms of the lease are. Just because it says triple net, it's not triple net. Just because the guy says so, it's not. The lease will tell you who's responsible for what. So technically, it's not triple net. So I think I don't know when it started, but at one point it was called there's a triple net lease or a double net lease or just a single net lease or whatever. Now everything's triple net, and it's not always the case. So sure, if there's a Starbucks in your town that's for sale, like we go through and we understand what it is that we're getting into. For someone just trying to figure it out on their own, it's much harder to do, right? Because going through that lease could be, it's a real pain. It's not fun. It's not fun times. But so we do, right?
Yeah, and obviously Starbucks has a different set of lawyers than we would have. So, this is definitely something that has to be done by a professional like yourself, When I was saying about the due diligence, it was more about the overall market, that the locality of the real estate is good. Yeah. But you definitely have to know what you're getting into in terms of the contract with Starbucks, because, I mean, if anybody can pay their lawyers, it's those kind of companies.
That's right. They have a whole army of attorneys. I mean, I have an army of attorneys, but their army is much bigger.
Yeah. And it's... well, let's not get into the lawyer part. But anyway, I think having everything kind of said that we said from multifamily to net leases, the beauty is a passive investor can, I usually say, 1 hour education a week consistently over many years can completely change the trajectory of your family life. Become a passive investor, align yourself with trusted operators, and make sure that you take a large part of your income while you can and invest it in assets that appreciate in cash flow.
Yeah, 100%. I think that today now more than ever, in recent history anyway, the play of going to work, working at a company for a very long time, getting the gold watch after 30 years of service, the gold Rolex, all that is what they used to do back in the 60s and 70s. Those days have long been over, and trying to think that your house is going to be your store of value is not the way to go. Again, why would you invest in a single family home? The house that you're paying for out of your pocket, it's actually a liability, it is not an asset. And the price of the other properties around it are having a direct effect on the value of the one that you're currently living in. I don't like those numbers. I don't want to leave the future of my building or my home rather in the hands, again, it's about control. I don't want to leave them in the hands of all the other surrounding properties. And it's going to define the value of the house that I'm living in. It's ridiculous. It really is. And it doesn't make any sense. People used to do that, though. Back in the 60s and 70s, people would buy a house for $5,000 or $6,000 or $8,000 or $10,000, and it would increase in value. They'd sell it, they'd have a little nest egg, and then they'd go move into an apartment somewhere. That was the play for many people. Not for everyone, but for many people. You can't do that anymore. You just can't. It's not feasible. It is just not feasible, you know? Those big jumps are going to stop if they haven't already, and the value of the dollar is dropping way faster than ever before. You just can't play that game anymore. Investing in real estate is a must, and I don't care who you're investing in. That's the thing. You invest with us or not, it doesn't matter. I think that it has to be part of your strategy regardless. Nowadays, you kind of have to do it. It has to be done, right? And for many people that have not considered it, they ought to very soon, because things are changing very rapidly. So it's something that has to be done.
Talking about things changing, I always say we're kind of coming out of the golden decade of multifamily real estate, or certainly in terms of interest rate and everything, and now we're moving in a completely different times, maybe a little bit more normal from like a 50, 70 year point of view in terms of interest rate and everything. What are you doing right now with your company to set yourself up for success, and obviously also taking care of your passive investors over the next couple of years?
Sure. So what we're doing is we're focusing primarily on net lease and development, right? So I'm not saying we're ignoring acquisitions, our bread and butter acquisitions that we've always done, but those acquisitions have got to be very strong in order for us to do those deals, right? And when I say that, I mean, like, we were buying mostly B and C type of assets, but now we're building mostly A-class assets, right? Very different demographic, different locations, usually tax advantaged of some sort, right? So that improves NOI. And you get a brand new building, and to meet demand that's happening right now, right? That's the key thing. Like, we're building all this stuff not because we're so happy about it or whatever, which we are, of course, but it's more like the strategy behind it is because we're meeting a demand that's out there, right? Like, again, this deal right here, Rockefeller, 432 units, I believe is the last number that I had that I recall here. 432 units in this building. Literally, right 100 feet away from us is Sherwin-Williams headquarters, right? Like, there's 6,000 jobs moving in right next door. So I'm not worried about this building filling up. It's going to be fine. It'll be fine. We're building where there's demand. We're building near Cleveland Clinic. We have two $11 million projects, soon to be a third one, and a $32 million project out there too. So that one's already started up. Again, Cleveland Clinic is going to have 20,000 new jobs in that area, like right up the street, right? So we're doing deals like that. We're being very intelligent about what it is that we're building. When it comes to the net lease, like I explained before, net lease, good, steady stream of income. There's very little guesswork. It's risk-adjusted return. Sure, it's not going to be as juicy as a multifamily or as a development deal, but you can literally put in your money this month, and you can start getting returns usually within next month. 30 to 60 days, the monthly check starts rolling in. Very hard to beat that. And you get all the advantages that I mentioned before, the tax advantages and all that fun stuff. I mean, it's kind of like, to me, it's a no-brainer. It's like, you have to do it. You have to, I certainly would have done it if I knew that it was even possible. And back then, when I was working in corporate many years ago, there were no podcasts. There was nobody talking about this stuff. It was all like a big secret. And the one thing that social media has brought is now people at least know about this as a strategy to help build wealth and start building some passive income.
Yeah, and it's real what you're saying. Like, I've spoken to investors in completely different age groups. Just this week, I spoke to somebody who's 70, and he built the majority of his wealth in the last 8 years in multifamily. And he worked for over 40 years before that. And he didn't even have a fraction of what he was able to build, educating himself and taking massive action in the 8 years thereafter. And but also some of the other folks, they were like, oh yeah, I heard this on a morning radio show and somebody spoke about the conference. That's like 30 years ago, And then you physically had to go there, not knowing what to expect whatsoever, because you couldn't just pull up a YouTube video or anything. There was no further information beyond. It's like, okay, there's a conference and people teach something about wealth building maybe, or real estate investment. And today, the level of access we have is completely different, which is why I consider it's just an obligation to take care of our families, because the information is right there in our palm. Like all of us walking around with those the whole day. And it's right there. Yep.
Well, the one thing I will say to your audience, the same thing I tell myself too. You're the one gentleman you spoke who's in his 70s. You say 70? He was 70 years old.
Yeah.
70, right?
Yep.
Don't wait. Don't wait till you're 70 to do this. Like, if you're getting this message right now, and you're in your 30, start now, because conceivably, you could be wealthy. You can be financially free and wealthy in 5 years. It can be done. If you're willing to put in the work. It's a lot of work. It's not easy like the gurus say it is, but if you align yourself with the right people and you put in the effort, which at the beginning is paramount. It's a lot of work, but once you do, it becomes easier as you go. Like, here's one thing: the first deal that you'll do, the first deal I did was freaking hard. It was hard. And then the second deal was less hard. The third deal was even less. The fourth deal it was way easier. Now I think we have like 6 or 7 deals cooking at the same time now. And we just handle it. It just goes, right. There's no way I could have done that until I did deal number 1. And deal number 1 is enough to get people to just stop. That's how hard it is. They're like, screw it, I'm not doing this thing. It's just too difficult, and they just quit, right.
Yeah.
If you can get past that first deal, the second one will come very, very quickly. And just keep putting in the work and push through it. That's about it. I mean, that's the hardest part, is getting that mental toughness to get over it. But once you do, I promise it is totally worth it. If you buy the right deal. Got to buy the right deal, though. Don't buy a piece of garbage. Buy the right deal.
And if this leaves you confused, there's still the route to be a passive investor for 20, 30 years and still retire a millionaire. That's one of the things that I think it's still so much better than just giving the money to the bank, for meager returns. It's like, if you consistently stay engaged, even as a passive investor, you can have a really, really good life.
100%. Don't. If you have a bunch of money in your 401k, you can put that into a self-directed IRA and start investing that way too. Your HR department, if you're in corporate, HR will not tell you that, but you can certainly do it. They'll try to discourage you from doing it. Do not let them discourage you. Talk to your tax advisor, talk to your CPA. It is certainly doable. Again, when I was in corporate and I learned about the self-directed IRA stuff, even they were trying to discourage me from doing it. It was hilarious. Now it's like, I want control of my money. That's the thing. This whole thought about, just put it into this bucket over here and some other people are going to control it. Why would you want that? Why would you want to know where your money is? I feel a whole lot better knowing that my money is sitting in that building over there, or my money is sitting in this building that I'm in right now. Wouldn't you? If you threw down $200,000, wouldn't you want to know that? Yes, I'm invested in this building right over here in Cleveland. You know where it is, right? You want control. Yeah. You want to know where your money is,
Definitely better than investing in a coin in the Bahamas that has no real value. No, just kidding. Little side note. Yeah. Well, Agostino, this was
no, that's true though, right? It's true.
Yeah, go ahead.
No, I was going to say it's true, right? It's those scams are not. It's certainly not the last one we're going to hear about. I know that. But all that money ended up in the Bahamas with the whole FTX thing. I don't even know. I forget how many millions of dollars that property was that he bought with it. Can't be touched, apparently, or maybe it can be. I'm not even sure. But he was bailed out, by the way. What was his bail set for? Some insane amount of money, and it was paid up it was paid up just like that. Huh? Wow. And he says he has no more money. Huh? Isn't that strange? That's again. Why would anybody want to do that deal? Why don't get greedy. Just try to find a good operator, invest with that operator, and understand what it is you're investing in. There's no get rich quick. In the history of humanity, get rich quick has very rarely worked. It's very rarely worked.
Well, it might have worked for some, but the reality is it's a pure gamble. And humans, yes. I don't know, we're wired to fall for it. Like there's a large part of us who just want to believe it's all true. We want to believe that this is how you can do it. But I think if history has shown something, it's in the consistent effort where there is the solid returns, where it's not just a gamble. And again, it just falls back on real estate, real things. No, just kidding.
But it's true though, right? Here's the thing. Real estate is not sexy. It's not the cool new thing. It's not like high tech. It really isn't. It's slow and boring. But real estate has been around for thousands of years, and it's worked every single time if it's done properly. The reason why millionaires and billionaires invest in real estate is to preserve their wealth. There's a reason why they do it. There's a reason why they do it. There's certainly, Warren Buffett didn't take $4 billion and throw it into crypto or FTX. Certainly didn't do that. What does it tell you, right? Real estate has been a store of value, will continue to be a store of value long after you and I are gone. It will be, forever, right? No matter what happens on this planet, as long as there's humans here, real estate will have value.
Yeah. Well, Agostino, thank you so much for all your insights. I mean, this has been quite a conversation. Thank you so much for your time. Where can people connect with you? I want to make sure that they're plugged into your platforms. You have an amazing show yourself, so I want to make sure they can go over there and subscribe.
Absolutely. So bulletproofcashflow.com, we're everywhere. We're on YouTube, Facebook, LinkedIn, everywhere. We also have a couple of free guides as well. So if somebody's looking to do this, if they want to, guidetobrokers.com and guidetocapital.com. So you can download those 2 free ebooks there. Again, totally free. Just put in your email address. It'll send it over to you, and that will give you some insight on the work it takes to really talk to brokers, or the work it takes to really raise money. I think it's a really good starting point for someone who might be interested to do it themselves, or at a minimum, understand the work that goes into doing it. So it'd be very, very helpful for anybody out there looking to do that. Yeah,
like always, I encourage everybody to educate themselves. That's where it all starts. Just educate yourself. Don't take our word for it. Go at all the different sources. Make sure you're on top of your game, because you're in charge of taking care of your family. Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.